Hey all, welcome in. It's Saturday. This is more of an analytic charting type Bitcoin video today. A lot to get through. Really, the world has now figured out one of the things I figured out about 10 days ago, the fact that this carry trade was actually happening and the people selling were the hedge funds, not anybody else. I'll also break down some mixed news, bad news, good news, and our destination for December 2024, which will be interesting. Thank you as well to the mods in chat, T&D, Tesla, and Sean Donnelly, and everybody else. The crypto market cap is still 2.35 trillion. We're going nowhere fast, but that's the summer doldrums, everybody. 64,250 is the price. Fear and greed is down to 53. It was 76 on Tuesday. And we'll talk about the miners, sputtering. I spent a lot of time this morning on updating my correlation chart. Daily correlation, Pearson coefficients between T+1 Bitcoin ETF flows and the price change. And I got some new discoveries as well, which are quite interesting, which ties back into the whole carry trade stuff. We'll talk about the chop zone, short-term holder cross basis, and the fact that we are right at it right now. Realized cap, 600 billion, M2 versus BTC, and some options analytics. So again, those that like analysis, like this channel. And it's important as well because that helps you know where things are actually going. So thank you all for coming. Disclaimer, none of this financial advice. So far, Bitcoin monthly returns, where are we? Per this little table, down 4.6% for the month of June, which, considering the ETFs have dropped $1.3 billion in the last 10 days, that's not bad. So there is a little bit of a silver lining here. Now, no Bitcoin news. I'm just going to go straight into pure charts and analysis based on this, which ties in some news as well. So if you like charts, you'll like this one. First of all, the title of the video today is Bitcoin is Sputtering. It's been very frustrating. We are getting closer to certain averages like the 200-day moving average, 200-day exponential moving average. Both, by the way, are about to cross each other. And typically, when they do, that can be a mixed thing. I haven't analyzed it, but when they do cross, you don't know what's going to happen. So if we look at the past, last time they did cross in the bear in late 2022, the price went down. Last time they crossed in early 2023, the price went up. And they haven't crossed yet in 2024. But again, there's such moving averages is not really that important. Therefore, I don't place a lot of weight on it. Now, there are some other interesting things happening in the space. The miners are having a very unique challenge so far in 2024. And in full disclosure, I invest in Bitcoin miners too. They are fascinating, especially when you buy them in the bear. You know, like, anyway, Bitfarms at $1 and CleanSpark at $2 and all these names which are crazy, crazy cheap. But they have had their share of problems. So let's dig into this chart real quick. Super Soul Man, thank you for coming. This chart is best explained by the post-halving environment. Now, mining companies have faced unique challenges since the halving, especially in this ETF era. Typically, miners struggle for months after the halving before prices increase significantly. However, this cycle saw prices peak before the halving, i.e. we hit a new all-time high before the halving, and consequently, firms have had to speed up their equipment changes, capital consolidation. They're doing a lot of share issuance and find ways to develop new miner revenue strategies. You got some miners pivoting now to HPC for the AI revolution, which actually has been quite remarkable too, because you have former bankrupt miners now being bid out, not for their Bitcoin ASICs mining capability, but for their power and their walls. That's it. Now, the current hash rate has indicated that miner capitulation is here. Miners are selling hand over fist, many of them. There's two that are still hodling. That is, if I'm not mistaken, Bitfarms and CleanSpark. Or is it Riot and CleanSpark? Anyway, I can't remember exactly. But the industry pressures have driven miners to sell at the rate higher than they ever have in the past 14 years. I shared that in a chart earlier this week. Basically, they've never had such low miner reserves ever, which is kind of good because they're almost out of what they can sell. Those that know where the price is going, we'll get to that at the end today, will be very impressed. So they need to hodl on as much as they can. And hopefully they made enough bank during the bear by issuing shares to have all their modern rigs either in place or ordered and paid for, and then just plug them all in. So this is part of the challenge. But again, a lot of selling has happened by the miners so far post-halving. Also, we are right at the short-term holder cost basis. This is typical bull market support. And again, the price now, you would not believe this, 64,370. The price of Bitcoin as it stands right now is 64,300. So basically, we're $70 under short-term holder support. Now, when we look to see the amount of time we spend under here, typically in the bull market is very short. But again, you could argue this time is different because we peaked earlier, which does screw up the moving averages when you benchmark them against historical points in time. But for now, inaction and indifference in spot around this price is not, you could say, it doesn't look like it's shaping up to go to the moon just yet. But there's more. There's a lot more. Let's talk about this. HeyApollo had a tweet today, and they said Fidelity selling 700 Bitcoin, 4.8 million, and they sold 7,000 Bitcoin, about 450 million in 5 trading days. And the question is, what's going on? So a lot of people are beginning to say, why? Why are these folks selling? We know Grayscale, big dump. Fidelity dumped a lot as well. What's going on? Well, this is it. This is probably the coolest chart. Quinn Thompson shared it. And it's a chart actually that was created by Coinbase, if I'm not mistaken. And what it's showing here is a constant drift upwards in non-carry trade ETF flows. This is so important because that means retailers are coming in. It's a fantastic long-term trend, and it's what's putting in a floor price on Bitcoin, which is very bullish. So if you look at this chart, you have the spot Bitcoin ETF AUM minus CME open interest, and then the purple is the CME open interest, which has been growing. But now that is being unwound because we spent a lot of time over the last week or 10 days talking about the funding rates and how they're coming close to zero. So the carry trade no longer makes sense. So the folks that are unwinding their carry trade are the hedge funds like Millennium that has $2 billion in these ETFs, and they stack them hard back in Q1. So this is unwinding. But the point is, the most important point is, even though they are unwinding, the actual price is not tanking, which means people are stepping in to buy. People that missed the boat, they are now buying here because they know buying at this level, the short-term holder cost basis during a bull run is a clever place to buy. It's considered a floor. This also shows how the floor is being built as well. Now, this is another person, Mike Cagney, comes in. We've had 15.5 billion of net inflows into the ETFs, but a $7.5 billion increase in futures open interest over the same period. The basis trade, i.e. buying spot via ETFs and selling futures toward earn what was insanely high drop, not some Coinbase conspiracy, is why the ETF inflows haven't driven prices higher after the initial pump up. As I spoke about, it's like they put a lid on the price action. But the good news about this, if you turn this around, it's important to look at both sides of the market. For example, there's 450 Bitcoin mined today, Y inflows into the ETFs, and that ignored the short going on the futures at the same time. But now that the basis is not as attractive, the unwind, this is the important part. This is the part that really got me. The unwind of the carry trade, Millennium maybe selling $2 billion in ETFs, is not tanking the price. Very important. When they got into it, it didn't increase the price because they had the lid on it with the shorts. And the corollary is also true. It's not tanking the price down, which is super important. So that begs the question. Let's analyze the correlation, like I've been doing from the very beginning. And this is a bit of an eye chart, but let me explain what I do. I take all of the daily flows and then calculate the impact on price a day later. So, for example, if 200 million comes in on a Friday, I look at the price 24 hours later. If 200 million goes out on a Wednesday, I look at the drop in price, or sometimes the price increases on the Thursday. So this is exactly what this thing does. And I've been building it out now for 113 days. So here, this is the correlation. For the first, I think it was 90 days, the correlation was 81%, right? And what that means is 81% of the ETF inflows explained the subsequent Bitcoin price action. Then over the previous 20 days after that, it was 65% explained. And over the last 20 days, only 8% explained through the flows, which again proves this point that the futures, CME futures, put a lid on the price going up when they were buying spot, shorting the futures. The same thing goes down as they unwind and sell the spot. The price isn't tanking. This is why the correlation has gone to poop. Even though the flows are going out, the price is stable, which is really cool. So you can see here, the blue are the money flows in and out. Middle line, of course, is 0. Same thing on the right-hand side is the price delta T+1. That's what happens to the price after the flows. And what's also interesting, we had the largest outflow over the last 7 days ever in the history of Bitcoin ETFs, $1.3 billion. And these were not the retail, these were not the pension funds. Okay, so these are the hedge funds unwinding. That's now proven. I was 95% sure 10 days ago. I'm 99.9% sure now. That's exactly what's going on. So again, don't fret. Don't be anxious that the hedge funds are unwinding, because it didn't buying into it didn't reflect that much in price. Selling out of it is probably not going to tank the price much. And of course, we have that very special floor short-term holder cost basis. And the people that missed the buying opportunity during the bear are grabbing some right now. And that's holding prices steady. And then, of course, you've got the Michael Saylors too. But we still have the additional headwinds of course, the miners selling too on top of the hedge funds. So things are still quite impressive. Now, in other news too, Bitcoin realized cap hit $600 billion. And I apologize if I spent too much time explaining that previous situation, but everybody asks me all the time. So I hope it's clear for once and for all. Let's get back to this on-chain chart from the team at Glassnode. And this is the realized cap hits $600 billion. Basically, a high realized cap indicates a very strong, consistent upward trajectory with notable accelerations as well. We see that big, steep ascent so far in 2024, much of it driven, very similar to what happened after summer 2020. The good old times. You had the C19 bargain basement sales of stuff, and then it just went completely bonkers. We're a little bit earlier this time around, but still there's more bonkersness to come for sure. And the current surge indicates substantial market activity, the long-term holders transacting and potentially revaluing older UTXOs at higher prices. What this basically means as well, imagine Satoshi Stash, 1.04 million Bitcoin. That was transacted maybe at $10. So the amount of realized cap from that 1.04 million is nothing. It's absolute nothing burger. But when the long-term holders, which is my other discovery early this year, the long-term holders were selling their spot Bitcoin before the halving, and they were probably buying the ETFs for safety and security and to put things into funds and estates and other types of things. Still have the Bitcoin exposure, but getting out of spot, moving to ETFs for security reasons. And that also had a huge impact on this realized cap as well. Now, realized cap growth does provide insights into market sentiment and investor behavior, highlighting confidence in Bitcoin's value retention over time. And this is so important. The interplay between realized cap and price illustrates Bitcoin's maturation as a digital asset, with increasing capital locked in at higher valuations, reflecting a robust market structure. So important, so good to see a new all-time high in that. Again, remember, a lot of stuff has not moved forever. 5 million Bitcoin are probably lost forever. Now, this brings me to my next chart, which took a bit of time to put together this morning. So I'm interested in the where Bitcoin spends its time in ranges. And these are ranges in $5,000 increments from the beginning of time. And we had nearly 3,000 days spent, 0 to 5,000 in the history of Bitcoin. But I want you to focus your eye on where we are now in this cycle. So historically, if you imagine these cycles, they map back to bull and bear markets. But there are zones. Like if you remember, if you were new to this channel last year, I'd always talk about 42,000 being step number, I think was step number 3 or whatever, because that's where a lot of action just was. So if we look now, this is a cool analysis. If you calculate the amount of time, the big zones over the past 8 years or so, $25,000 to $30,000, 217 days in this zone. The next big zone after that was 40 to 45. Coincidentally, that's where the 42,000 step is, 152 days. And then 60 to 65,000, 73 days. Coincidentally, 60 to 65,000 is where we are right now. If you don't break above 65,000 tonight, that number of days will go up by 1 tomorrow. And the important thing to focus on is the distance in time between these different layers. Of course, as the price goes up, $5,000 becomes less and less significant. But the point is, we've only spent 14 days above 70K, and there will be more days above $70,000 if you're concerned. But the big zones, again, are those ones highlighted in red, and you can see we're going to get more clusters. And remember, it's this summer is always a sideways chop time, and you always get chop zones in Bitcoin price. It's like running up a hill. It stops to rest on little plateaus every now and again. These are the plateaus in the past, and we're in one of them now. Now, another news too, I covered this yesterday, but it's a new perspective from Sanjay. Thank you for sharing. It shows you very clearly the red line down, the amount of balance that's available. The Bitcoin balance on things like exchanges continues to fall, which is good news. And remember, even though there might be Bitcoin on exchanges, it doesn't necessarily mean it's for sale. People just don't feel confident in self-storage. Therefore, they leave it on the exchanges. So, in other news too, this is kind of part of the good news looking forward. This is the 6-month global M2 growth, but a 6-month percentage change. So it's very laggy. But the beauty of it, done by Delphi Digital, is how the correlation between the actual M2, global M2 money supply and Bitcoin is perfectly correlated. When global M2 goes down, Bitcoin price goes down. When global M2 goes up, which is the blue stuff, by the way, Bitcoin gold goes up. Very simple. Now, we have been in a bit of a shrinkage of global M2 over the last lagging by 6 months. And guess what? That's going up now. So I can tell you for a fact, the next 6 months, Bitcoin price will go up. So there's still so many people out there that are like, oh, it's done. We're going back into the bear market. No, this tells you where we're going to go. All right. Lagging by 6 months. Global M2 is growing. Chinese are printing like crazy. US began printing a month ago. It's all coming. Europe is probably printing like mad too. I need to pull up some European M2 data too. So I'll try to get some of that for next week. So that's so important as well. And this is another key factor that people always forget. This is from Joe Consorti. And given that this is an election year in the US, the stock market is one of the few remaining advantages for the incumbent president to show that they've done a good job. They need to pump that market, okay? That's what people like to see. Now, any sign as well of Bitcoin's underperformance might signal broader risk market struggles and will likely be addressed quickly. This is the important part. We believe that if Bitcoin's current troubles or an early warning of wider market issues, corrective action from authorities such as the Fed will be swift to maintain market stability and drive the prices up in line with their unofficial mandate to support the S&P 500, which also will float Bitcoin. So another feather in the cap to show 6 months from now, Bitcoin price will be higher, probably a lot higher. But the last thing I will show you today to prove that's a lot higher, and you know I do options analytics like a madman, this is a set of Deribit options out to December 2024. A ton of bets at $110,000. These options players have been so on the money. They are correct 90% of the time. Put call ratio 0.46. All of the green bars are call options, ladies and gentlemen. A couple of people are still bearish, hoping for like a $50,000, $60,000 Bitcoin, but the rest is crumbs. All the money is at the north of 100K mark, 110K as well. And they are right 90% of the time. I remember sharing this data in December 2023 and saying, well, I was hoping for a $42,000 Bitcoin price at the halving. And I said, the options traders are betting on $70,000. Guess where we landed at the halving? Pretty much $70,000. These options traders were correct. Very correct. So do not fade these folks as well. And in other news too, Germany, they did seize that 50,000 Bitcoin and they sold about 3,000 last week. But they are sitting on 1.1 billion in unrealized profit on their confiscated Bitcoin. Wouldn't it be cool to be a government and just be able to confiscate a big bag of Bitcoin? What a job. What a nice job. Anyway, Bitcoin only playlist will be at the end of the video. Click on it if you just want Bitcoin only. But now it also includes miner data, proxy data, which you all asked for, so I am including that. And we'll get into the Bitcoin black hole. Day 113 in the box. Again, more drainage. I have to stress 1.3 billion out in 10 days, but slowing. We had the previous high record ever for 7 days was about 1.1 billion. We did more in the last 7 days, 1.2 billion. Okay, 1.3 billion over 10 days, 1.2 billion over the last 7 days. That's a new record of outflow, again explained by the hedge funds unwinding their carry trade. This is what the chart looks like. No great shakes, nothing much happening. But the good news is the trend is creeping up. So all the major selling is done, ladies and gentlemen. You can see here these 4 blue blocks seven in a row, plus 2, 8, 9. And we had one positive day, but that is a new record, ladies and gentlemen. We have never had so many red days for the Bitcoin ETF in the history of the Bitcoin ETF, going all the way back to January 11, 2024. So it's been a bad spell. But the good news is, all right, the piece we have to stress is Bitcoin price has not tanked hard despite incessant selling by these ETFs, which explains the carry trade. 1,653 Bitcoin were added to the system. That's 4 times daily issuance. Not bad. A lot of Bitcoin went back in. They'll probably restock the OTC desks, etc. So there's no supply crunch incoming over the next month or two. And finally, Grayscale. I do believe the hedge funds threw a lot of money into the GBTC fund with the plan to get out of it too. And that's dumping again. But that is also slowing down like the rest of the dumpage. So who knows? It's very rare to have so many negative days in a row for this type of asset. Next week should be positive. That's my forecast. Thank you all for coming. I'll be back in less than an hour with a very quick update on Solana if I can knock it out real fast. There's some very good breaking news. So the weekend recap will be delayed. So hang tight, but I'll be back real soon. Thank you all for coming and have a great day. Bye-bye. And a great weekend.